Hello everyone, my name is Ram Dhamija. Welcome to my channel. Wishing all the viewers a very happy Dhanteras. So today's topic for the video is also based on two very important things, which is gold and silver. How have they actually moved over the last 1 month, 1 week, and even yesterday there was very sharp movement in both price of gold and silver overnight. And what is the future outlook, whether you should invest, is whether it's the right time to invest, how to invest in these commodities, precious metals, and what is the outlook on the other aspects which are related to it. So let's begin today's video. So let us first start off with the gold chart. Now, as you can see over here, the gold chart has been in a particular range from 3300. It has actually gone up to 4,300, and this price is in terms of the US dollars. It actually reached this 3,300 mark somewhere in April, and from there it had been consolidating till August. So April, May, June, July, August, 5 months of consolidation, and after that there was a clean breakout. So from the level of $3,300, it actually went up all the way to 4,400, almost $4,400. And last night what we have seen is that the prices of gold, at least in US dollars, have actually fallen a lot. And there was a huge crack last night in both price of gold and silver. Gold still fell little less by almost 2 percentage points, but silver fell actually much more. This is the silver chart. If you see over here, silver actually did a breakout slightly later. So silver actually broke out in the month of September, and it broke out from a level of about $40, and it actually went up all the way to $54. Now the last previous high for silver was made in 2011. That was almost 14 years back, and the high was again $50. So it broke the $50 mark, and it actually made a new high at $54. But after that there has been a huge slam in terms of silver prices. Last night they fell by almost 5 percentage points in dollar terms. Even in INR, if you see, the price of silver has actually gone down to 1,72,000. It had gone to as high as close to 2 lakh rupees per kg. So it has also actually come down by 13,000 rupees today. And in terms of the gold price is down again at 130. It had also gone to about 132, 33,000 per 10 gram. So that has actually now come to about 130. So both gold and silver have actually cracked last night. We have seen that what was happening, because these prices are measured in US dollars, in INR, these prices actually also reflect how the currency movement is happening. So 2 days back, in fact 3 days back, what was happening was that silver was trading at a huge premium because there was shortage in terms of silver which was being reported in some of the ETFs, and the fair price of the ETFs had actually gone higher than the underlying price. What then happened was that there was sharp intervention in the rupee by Indian authorities, and that ensured that the price of silver fell in INR. It did not fell in USD. And then we saw that all the premiums that were there in silver ETFs vanished 2 days back. And now what has happened last night, Friday night, is that silver has actually cracked 5% in US dollar terms. So Monday morning you can expect that the price of silver in INR is also going to crack big time. Will be at least be down 5-6% for the price of silver, which is the traded price and ETF price. So these are some of the issues that actually you end up facing when you have a metal which is valued in US dollars, because the implications of currency also fit in. But at the same time, it also acts as a hedge against the currency for US dollars, because it is measured in US dollars. So what basically happens is that there are long periods wherein INR is going down continuously, and if you don't have any international equities or any other international property or any other assets outside India, then you basically don't have a hedge. And at that point in time, gold and silver act as a hedge against the foreign currency, the US dollar, or whatever be it may. So that is why these precious metals have been going up in value. They have not been going up in value in dollar terms all through these many years, because as I said, silver made a high in 2011, and then pretty much till 2025 right now it did not take that high out. So from $50 it actually went to $13 by 2018-19, and from there it has taken off. off. So but if you measure it in INR, the journey has been much more smoother. So this is one point I thought I will share with all of you, that how the currency intervention also plays in the determining these prices. Now this is the gold silver ratio chart. This is something which is very interesting to see. What this basically indicates is that what is the ratio of gold is to silver. We have seen that this ratio actually, let's say in 2011, had gone down to as low as 30. This was the time when silver had peaked, okay, and it went to as high as about 126. This was in March 20 when silver was at its lowest. So we know that the range for this particular ratio is somewhere between 100 till recently and about 63. Right now as we speak, this ratio is about 81. So it is somewhere midway. It is actually kind of stabilized and so on. We know that when there will be a frenzy in silver, this ratio might come down to 50 or even go below that. And when silver is completely neglected, then this ratio might go to 100 also. In my opinion, this ratio should be around 50 to 80, anywhere between that. The reason being that the demand for gold is not only coming from the retail or the traditional uses and store of value, but also the demand is coming from central banks, which is not so much in the case in silver. And hence the prices of gold are likely to be elevated compared to silver, and hence I'm saying that the price of silver could be in the ratio of 50 to 80 band. However, if you see whatever the reports are coming in, that the earlier mining ratio, that means how much silver is coming out of the earth and how much gold is coming out of the earth, used to be 1:32. So 1 unit of gold and 32 units of silver used to come out, and that was the kind of peg that was there. That ratio actually went down to 1:16, and now from whatever I'm hearing, that ratio has gone down to 1:7. So 1 unit of gold comes out versus 7 units of silver. And another problem in silver is that a lot of it is used in industrial demand. So about 60% of the silver usage is in industrial demand. And what that does is that once that silver, let's say it goes in any battery or solar or whatever, and that gets discarded, then that silver never comes back because it is in the landfills or wherever it may be. So that's another reason why, you know, the silver is becoming a more scarce quantity. But having said that, the run has been very, very sharp, and the fall that we saw yesterday was equally sharp. Also, there is another problem that is happening in the international markets, is that there was a difference between the spot price of silver and the future price of silver. So the spot price of silver was higher, the future price of silver was lower, and this situation is called backwardation. Basically, it means that there is a shortage of physical silver, and hence people want the delivery of silver right now. That situation has kind of eased a bit, so the spread, which was $3, has actually now come down to about less than $1. So which is also indicating that the stress has been kind of little elevated in the system. But let us see how the silver prices go ahead. The demand is very, very strong. And we have seen that if there is a surge in demand, and there have been news reports coming out from Australia, from Philippines, from Vietnam, pretty much from everywhere, that there has been huge lines that have been seen outside shops to buy gold and silver. So let us see how this plays out, but sufficient to say that this investment is actually good. Now let us look at how can you buy, let's say if you have to buy gold and silver. So one of the good ways to buy gold and silver is through mutual funds, and this is the performance of the mutual funds. If you see in the last 1 year, all the mutual funds have done really well. If you see 67% for HDFC, for UTI, so they have been, all the good mutual funds have been in the same range. So the one that I prefer is SBI Gold ETF and so on. This is all mutual funds, and they actually invest in the underlying ETF. So if anyone doesn't have the time to invest in ETFs and so on, they can invest it through mutual funds. And that brings me to my point that I'm a mutual fund distributor. I'm NISM certified and AMFI registered, and I help clients build mutual fund portfolio. So if any one of you is interested in building a gold silver mutual fund portfolio or equity mutual fund portfolio, then please do contact me through the Google forms in the description below. You can leave your contact details and I will get in touch with you, and then we can discuss about your portfolio. Even if you have an existing mutual fund portfolio, you can fill up that form, and I can advise you on how to optimize that portfolio as well. It's all free of cost. So just in case you're looking to build a mutual fund portfolio, you can contact me. So coming back to the performance of the gold fund, so you can look at it over here, that last 1 year. So let's pick any, let's pick for example SBI gold fund. So if you see over here, last 1 month performance has been 18%, last 3 months performance has been 32%, last 6 months 36, and last 1 year 67%. So these are the kind of returns that the gold funds have actually ended up giving. Another thing, important thing that let's discuss, which is the currency. This is what I was telling you about, how the currency got actually slammed over here. So you can see over here that 88.7 was where the currency was, and 15th of October is when the intervention came, and we fell straight away almost 1 rupee. So the currency became stronger against the dollar. It actually came back to 88, but this fall was sufficient to break the momentum in the gold and silver which was established. So it's very important to have a look at the currency as well. I'm going to talk about the markets in tomorrow's video. So today I'm taking up gold, silver, and the other precious metals and other alternate investments like Bitcoin, etc. Now, Bitcoin is another thing that has come in favor, in vogue for the last recent years. But what we have seen is that Bitcoin is not behaving like gold and silver. So while US markets have gone down a bit, Bitcoin has also gone down a bit along with them. So Bitcoin made a high of 125,000. While gold and silver continued to rise, Bitcoin has actually taken a fall. So if you look at it, last 1 week -3, last 1 month -8, last 3 months -10%. So Bitcoin has not been performing well in the last few months. And also if you see all the other cryptocurrencies, they are hugely down. They are hugely down in the last 1 week, 10 days. They have, if you look at it over here, this is the performance in the last 7 days. As you can see, Tether is down, and so they have been down. XRP is down -3%, and so on and so forth. So they were down hugely. Bitcoin is down in the last 7 days at about -5%. I think some recovery has come yesterday. As you can see, they're up +2%, but these all numbers were hugely down, anywhere in the tune of -10 to -25%, even till yesterday. So I think yesterday some recovery has come, and hence the number is looking slightly better. So like XRP is down -4, Bitcoin is down -5%, and so on and so forth. But sufficient to say, this is a category which is not promoted in India very well, and I would suggest for any serious investor to be very, very careful with these things, because they are not backed by anything, unlike gold and silver, which have been there for thousands of years, and which command uniform value across the world. Wherever you go, it will be honored. These cryptocurrencies, most of them are not even heard of in many places, and I really don't know the end use of these. The thing is that they, as many cryptocurrencies as you want can be created. So at last that I saw, 10,000 were listed on investing.com. So 10,000 cryptocurrencies are there. Which one are you going to pick? I mean, it's a complete bet. I would not advise any of that. I would advise that one should have a proper portfolio in equities, debt, mutual funds, gold, silver, have a balanced portfolio. Real estate, so be it if you want it, but cryptos is something that one can definitely avoid. Now coming to the other interesting thing, which is the oil. Now oil is very, very well behaved, which is great for us. There has been some news of India buying Russian oil and not buying it, and so on. So let's see how that plays out. But if you look at the oil performance, last 1 week -2.3, last 1 month -10%. So oil has been very well behaved. Till the time oil remains below 80, we will be very good. It will be very good for our economy. So oil is at 61. There could be nothing better than this. There's also another strategic reason for this oil to be down, because oil also ensures that the inflation is down. So US inflation, which is also linked to the price of oil or gasoline, whatever you might call it, is a major factor, and hence US will perhaps not let this oil prices go up significantly. And that is good news for us also, because we as a nation are huge consumers of oil, and if that remains down, it's going to be good, and it is having a positive impact on the markets as well. So you will see that markets are also starting to do well. So yeah, so another interesting thing is that yesterday, last night, we can see that Dow Jones, S&P, Nasdaq all closed in the green, and at the same time, as you can see, our gift Nifty is also indicating a brilliant start on Monday morning, almost up 161 points. So 25,917 is what it is indicating. So I'm going to talk about this tomorrow in detail, but today's video is dedicated to gold and silver. So basically the point is that gold and silver are given fantastic returns. If you see the returns over the last 1 year, 3 year, 5 years, 10 years. They have been very good, especially for gold. Silver is now catching up. So some percentage allocation to your portfolio should be there in gold and silver. Gold, I would say 10%, silver, I would say 3% is enough, sufficient. Though now Morgan Stanley and so on have also started saying that 20% allocation of your portfolio could be towards these precious metals as well. So that's a personal call that someone has to take, because the volatility is also very high. I, for one, my portfolio has exceeded about 15%. It's exceeded 15%. It's close to 17% now in these precious metals. Because of the lot of talk of de-dollarization and the fiat currencies going down, so I have slightly increased. And also because there has been a talk, holding bonds is not making sense right now, if you ask me. So I've shifted some of my bond allocation towards these precious metals. So each to his own, depending on what life cycle, what income stream, how much risk you want to take. So you can decide on that, and if you need any help, you can contact me. But the general rule of thumb which used to be there was 10% for gold and 3% for silver in your total overall allocation. But again, it depends on how you want to construct your portfolio and what your aims and goals are. So that's it from me now. If you like my video, please do subscribe to my channel. Please share it with your friends and family, and I shall see you tomorrow with the market update, which is going to be equally exciting, because Monday we are going to have a blockbuster opening. So let's see how that goes, and I shall see you tomorrow. Take care. Bye bye.